Hey, welcome back to More Than a Mortgage, where we help people create wealth through real estate and make really smart financial decisions. I'm Mike Black, and I'm here with
Tom Merritt.
Merritt today, and we're cruising along. We got the spring market here. We got a lot of competition out there. I know we've talked about it in the past, but
I feel like every market is crazy when we're in it, but this year seems to be crazier than ever.
I think it's really just an inventory. It almost feels like the inventory's been gobbled up in January and February, and
I think what inventory there was is definitely gone by the wayside, and so that's why I'm kind of excited about today's episode, because at the end of the day, just given the market we're at, how can you be successful? I think this is a little bit different than some of our past podcasts from the standpoint that it's more designed towards the realtors and lenders out there and the different things that we're seeing come up, the different questions, what has helped us to be successful and what hasn't really worked as well. And so I'm excited to talk through it.
Me too. And for those of you out there watching today, please follow us. We got a lot of good content out there to help you with your businesses, and we're now on Spotify, we're now on YouTube, and we will soon be on Apple Podcast here soon. So definitely follow us. It's a great way to stay in tune with some of the things we're seeing out there. The topic today that we really wanted to hit on was just questions. Like, Tom and I went through a coaching session not too long ago, and it was very interesting. It was around the three processes of the brain, any sales job, any relationship, any person that you meet for the first time.
Psychology
is like they all go through the same three areas of the brain, and the first one's a reptile, right? It's
reptile, yeah.
What's the reptile brain?
Well, it kind of goes back to our natural origins, right? When you're out hunting, when you're out being hunted, whatever it may be, you've got what we call the reptile brain, where it's an immediate reaction, right? Is it a fight? Are we going to fight? Are we going to flight? Are we going to get out of there? Or are we going to freeze? And I think, just human nature, whether we recognize it or we don't, everyone goes through that with the initial onset of information that comes their way.
Yeah, and that's pretty much everybody that we meet. There's always that guard up. There's that wall up front. And so, our jobs as professionals and salespeople are to help get people out of that reptile brain. And it goes for your clients. It goes towards your business partners, whatever the case may be. And we want to get them into that emotion brain, which, once you get into that emotion brain, you really start focusing on the trust factor. They start trusting you more. Right? And
that second step,
they're going to listen to you better, and they're going to understand what you're telling them. And ultimately, where we want to get people into is that logic brain, right?
The last of the three.
Where they're taking your advice. And so one of the things that Tom and I find, pretty consistently is when we meet clients, we talk a lot through how's your process been so far? Your realtor's great. We love your realtor. Where are you guys at in the process? And we find a lot of times that they're still in the reptile brain.
Well, again, so how do you overcome that? It's through the questions. And I think that's, again, going back to what we've been talking about, I think our entire podcast, it's all about building and growing the relationships, having that important team working together, sharing information, and really making sure that you're asking the pertinent questions to get to what it is that the ultimate goal is.
Yeah. And so that's something we all can work on, and that's something that Tom and I and our loan officers work on constantly, is asking deeper questions. I think that's going to put you in a better spot when you get out there and you start working with your clients, and they're going to trust you more, and they're going to take your advice. And in this market, you need to have good advice and leadership, and you need to be able to control the process, because if you don't, you're going to get buried.
And again, not that this is the theme of our talk today, no. But the reality is clients want to be led. And so where I find most of the failures even starting off is when we're afraid of the client and we're afraid to lose the client. And so as such, we don't implement, whether it's our process, whether it's our opinions, whether it's our information that we normally would give. And we basically were shortchanging the client because we're afraid to lose them.
Yeah.
The reality is, take control, take them through your process, and show them the ins and the outs. And if it's time for them to buy, great. But if it's not the right time for them to buy, let them know you own that duty.
And that means when they want to go out and see a property and they haven't even started the pre-approval process, that's a big miss.
I had a conversation on the phone on the way to this today, and they said, where are you with this pre-approval? I'm like, well, I still haven't gotten all the information that I need. And he's like, okay, because we went out and we saw some property last week, and they saw this property at this price point, and they love it. And they've already realized it's not going to happen. And so every property they've looked at since then, they're like, oh, but it's not as nice as. Well, so now you're already behind the 8 ball because you've gone out, you've looked at property, and the reality is nothing is going to look as nice as that first property that they saw.
So I had one on over the weekend that I got a text from the agent and said, hey, last I heard was this whole thing was on hold. And then I got an email or a text from my client saying, hey, we really found a place we liked. We went to an open house.
Oh, geez.
And we've been trying since November to get their ducks in a row and get their pre-approval done. And so what ended up happening was I said, well, have him apply. We'll see what we can do. He applied. He's self-employed. So I'm missing a bunch of stuff Monday morning where the offers due at noon. And I had to go back and ask for more stuff. And I had to ask for more stuff. And it led to more stuff. And so what ended up happening was they finally found a place that they loved. And we had to tell him, like, it's just not going to work. He wasn't even prepared to make a strong offer because he hadn't really felt comfortable with his finances. So
preparation. And again, so this kind of all circles back to what questions, and I think we've kind of, again, made this specific for the industry, if you will. What questions do realtors need to ask buyers? What question do lenders need to ask realtors? And then, what questions are we asking the buyers? And so we've kind of divided it up into those kind of 3 segments. And so kicking it off, if you will.
So I come to you, Tom, you're a realtor, and I want to get I want to go on a home search. And the first question you probably would ask me is,
well, are you pre-approved?
And I say, yeah, I am. My bank, I walked in the other day, sat down with one of the personal bankers, and here's my letter.
Yeah.
And so you as the realtor, you've got to go back and really
poke holes in it,
right? So how do you poke holes? What are some questions that you're asking that client up front before you go out and start looking at properties?
Well, and again, and this maybe stems from a little bit about what we've discussed with our conversations, but so you're comfortable with this monthly obligation. Do you know what this monthly obligation is? Do you know how much you're putting down? Are you comfortable with how much that you're putting down? Do you know where your credit is? Have you gone through it, and are you at the best potential spot for it? I mean, those are just basic questions right off the bat that, again, what I have found is traditionally a lot of the larger, and even just lenders in general, they take your information, they give you a letter that says you're pre-approved for X. There's been no consultation. There's been no type of what this means in terms of a monthly payment. There's been no consultation with what it means in terms of money down and what you should and shouldn't put down to put you in the best situation. And there's been no discussion about type of mortgages that you'd be looking at.
Yeah. So realtors out there, some easy questions to ask, I think, are, did you turn in all your documentation? Has the documentation been reviewed by an underwriter, or did the personal banker just look at it all?
Yeah.
The last thing you want to do when you get your clients out there and they make an offer is find out that, oh, well, I didn't realize you went 1099 this past year and we can't necessarily use your income. And
back to your story.
Yeah, back to square one. So has an underwriter actually reviewed? The deals that we're winning a lot right now are centered around, we've been through underwriting already. My clients understand. I just listened to Tom on a call with an agent a few minutes ago, and it was like, hey, if he wants to pay cash for this place, he could pay cash for this place, but he's been through underwriting, he's tight, we're not going to have any issues whatsoever. It was that confidence builder that you gave the agent today, but you found that out because you actually spent a lot of time talking through this with the client, right?
Yeah. Well, the worst thing you can have is, 3 weeks down the line, find out there's some unexpected consequence, which turns into not being able to do the deal.
And then whose fault is it?
It's mine.
It's my fault. It's my fault. Everyone blames the lender, right? So, have your assets been verified, or did you just state them? That's another great question that you could throw out there, to find out if your clients have really gone through the due diligence process. Credit. We just literally had one that I closed yesterday, and the credit was up front. The credit wasn't great, and I said, "Hey guys, this is going to probably take about a week to week and a half to get through. Once I get all your documents, because I need to make sure that underwriting is not going to have a problem with your credit. You got, mid 500 credit scores. We got it through, but it took a little reviewing. It took some time to get through all that. Once they had all that buttoned up, they were ready to go.
Yeah.
Right. So they didn't make any offers. And then, this is a question I get a lot from listing agents. They call me and they ask me, has this been run through DU or LP, which are the automated underwriting engines that approve loans for us? I take it a step further and say, it's been run through both. And we've actually had a full-blown approval on this by an underwriter.
Which, again, is almost like a cash offer at the end of the day, because you've already had and done the due diligence so that you've got this tied up, buttoned up. There's no question in your mind, whether or not it's going to go through. And again, that kind of pivots to the questions that these agents should be asking the lenders that they're working with, right? So where is the status? How strong are these buyers? Because there are those that are pre-approved for $500,000 that are like wish and player. Like if the taxes are above $1,000 a month or the HOA dues are above $500, we're out. And there are those that are like, they could afford $800,000, but $500 is kind of where they want their monthly obligation to be. And so having an understanding as an agent working with your lender, and again, once why the team approach is so important, is imperative.
Yeah, and I mean, it's a two-step process, right? It's not only working with the client and asking the right questions, but I think going back, like you just said, to the lender, especially if it's a lender they don't normally work with, right? And so asking those questions. Now, realtors, I'll tell you, some of these lenders you're going to talk to, like if it's at a big bank, they're going to shut you down. They're going to tell you they can't talk to you.
God forbid it's on a weekend.
God forbid it's on a weekend, but they're going to tell you sorry, I can't tell you what their max payment is, or sorry, I can't tell you how much they're putting down. So, the agents that I'm seeing winning the most in this market right now, they have control over that process, and they're making sure that they know all those parameters. They have to know what their max payment is. They have to know how much they're putting down. They have to know how much they have the ability to put down, because sometimes they're not just putting down they might want to put down 10%, but we verified that they've got enough to put down 50.
Right. Well, and that kind of again lends itself, excuse the pun, to the next question that, a lot of, I would say, again, working together as a team, the agents should be talking and working with the lenders are. So what are our strategies and what levers do we have to push in this competitive market? Like, do they have the additional cash to put down, even though they say they're putting 10% down? Could they get to 20%? How secure is their job? Where is their debt to income? And are there two borrowers? We had a borrower, self-employed. They're self-employed. Do you have any concern with losing your job? None. Yeah. I own my business. I run my business. Right. I've got the down payment. I'm not going to fire myself. Right. I'm not going to fire myself. I've got the down payment and I have the credit score. So what's the point of the mortgage contingency? But unless you have that conversation, everyone just kind of goes this certain process. And the reality is they're just going to put the mortgage contingency in there because that's what they're supposed to do. But if you have that conversation and you have those questions, it's a much stronger offer without a mortgage contingency.
Yeah, we lost a deal last night. I got a text from the agent saying we didn't win the deal, and I said, okay, did they say why? And she said terms, and she's like, I'm not sure what terms they were talking about, and I said, I can almost guarantee you that they waived their contingency. They waived all their contingencies.
That's what the market is right now.
That's what the market is right now, and so that dictates whether you think so or not. That sometimes it doesn't always matter about the best offer. It matters about the cleanest, right?
Well, I talk to clients, and when we have our consultations, we both do. But there's two things, when you're approaching an offer, and everyone always focuses on the one, which is the highest price. And everyone wants and thinks that the sellers want the highest price. But the other side of it is, basically how clean the offer is, like you were saying. Because at the end of the day, it's great to have $800,000 purchase price and the next level being $750,000. But if they get out of the deal, you're starting all the way back at square one. Yeah. So in some cases, you're going to get deals that are going to be accepted that are less than others if they're clean deals, to your point.
Yeah. And then, the worst case scenario, which is something that happened recently to one of my realtors, is that they end up renting again.
Right.
You spend all that time taking them around, looking at places. We couldn't get the client comfortable enough to make a waive contingencies. Now, there is a time and a place for it. This client,
100%.
This client was putting down 5 or 10%. So you got to be careful with that because
agreed. You don't want to put your client into a position where, they're going to really put themselves at risk. And so that's where that conversation and those questions are super important to make sure.
Yep.
But, and again, we talked about this before we even started. So if it's a client that is not comfortable or perhaps not even able to put down, or at least some of those contingencies, or put down the amount of money that, may be necessary, what kind of buyer are there? What's sometimes your advice?
Fall buyer. They're, I mean, and you got to have that conversation too. Guys, look, time is money. Like, when you get out there and you spend, gas ain't cheap in Chicago, running people around, God's land, trying to find them a place. Sometimes the questions that you ask up front are the identifier on what type of buyer they are. Like, if they're a fall market buyer, they don't want to do all the waiving contingencies, and they're probably better off buying in the summer or the fall when things are a lot slower.
Exactly.
Right?
So how can you put a plan in place? And again, this is more the consultative approach, and again, the team approach, where how about, can we extend, instead of buying in June, let's look to buy in October or November? How can we put that plan together to put them in the best possible situation to purchase then without all the competition?
Yeah, well, I mean, one's just looking at their lease and know what their options are on their lease, and
whether it's month to month,
can they go month to month? Can they break their lease? A lot of times those breakage clauses, if you're renting from a management company, are not that hard to do. And
1 month's rent, maybe
1 month extra rent,
or you can sublet.
Or you can sublet. So, just knowing your client. Now, a couple other things that I think that are important to ask lenders, because I don't know about you, but, I'm getting a lot of 14-day closes.
Like, why?
Like,
well, that's what everyone wants.
There's two components to that question. There's a question from the realtor to the lender that says, "Hey, can you guys close in 14 days?" And then the question from the lender to the realtor is, "Why do we need to close in 14 days?" Because in most cases, what we're finding is that is just sweetening up the offer. But 21 days might give us a little more breathing room. Do we have to close in 14 days? Is there something going on with the seller? Do we need to get out of there quicker? Like, that's a good question a lender could ask the realtor, is do we need that? Because our jobs are to help everyone and set them up for success. Yes, can we close in 14 days, especially if the client has all their documents? 1,000%. But do we need to?
Right.
Because I want everybody to have a good experience.
Well, in some cases, and we both, have talked to listing agents after these offers go in, and it's like, so are you looking to close in 14 days or just want to get it? It's like, no, we don't care. We just, we just want to make sure this closes. And so 14 days gives us the more assurance. I said, okay, so does 21 days work? Like, at the end of the day, are your clients needing to get out of there? No, they're actually going to be staying and renting back.
Yeah.
Okay.
So we didn't really need to do that fast, but it was to sweeten up the deal. So
perception versus reality.
Make sure that that is something that the lender can even accommodate, though, because not everybody can close in 14 days, right?
No, I mean, you got to get everybody on board, the borrowers, the appraisers, inspectors, just because it's a lot.
So those are great questions, like that realtors can be asking lenders up front. Do a lot of vetting. It's okay to vet the lender, especially if you don't know them, or they're out of state, or they're online. Like, this is I think we always call it being the captain of your ship, or being the quarterback of your team. Like,
take control.
Take control, run it like a business. You got to run your business like a business. You can't run your business like, nothing against used car salesmen, but you can't do that. Like, you're not.
Well, they're transactional, not relational. They're not business owners.
And I think the best agents I know are.
Yes.
Right.
Oh.
They're the quarterbacks. They're running the play. They're making sure that their clients, I had one the other day. He told his client, "Do not use your bank. They are notorious for having low appraisals." And
is he successful?
He's very successful.
Yeah. Well.
Do not do that. And lo and behold, they did it. And guess what? Exactly what he told them. Their appraisals come in low every time. Their appraisal came in $100,000 low. Now they're rebutting the appraisal. We know that never works. So I'm probably
it takes up time.
It takes up time, but I'm probably going to be talking to them later on this afternoon. So be the quarterback, guys. Just really spend some time asking the right questions and vet that pre-approval. Because if you don't, who is the agent on the other side. Typically, they're vetting that. They're vetting that for their sellers. So you don't want them to all of a sudden start questioning a bunch of things on a pre-approval letter that doesn't make any sense, or who your lender is. You want them comfortable with your team.
Absolutely.
Right. So what are some questions that we should be asking realtors?
Well, so I think it depends on the buying side and or the listing side. But from a buyer side, it's, have you sat down and have you taken them through the process so they have an understanding of what to expect at each step along the way? Because, you get to that offer on Friday or even Sunday deadline, they just see the property, it's their first time out, and now everybody's freaking out if they're not prepared.
Yeah.
And so you need to make sure that they're prepared.
So have you had a consultation with them?
Yeah.
I think that consultation is like one of the most important pieces on both the lender and the buyers, the realtor side. Yeah, the best transactions I have during this whole process is when I do my buyer consultation. The realtor does a good buyer consultation. We bring it all together with follow-up notes. Everybody's on the same page, and we know what to expect. We're just winning at such a high level right now with that going on, that like, if you're not meeting with your clients and having a professional presentation where you sit down and run through the ins and the outs and what to expect, it's no wonder people are nervous making offers where they don't want to waive anything. Right?
Yeah, I can understand that. If it's the first time and you just saw this property and they're telling you to waive this or offer above, and that's the other thing, right? The perception versus reality. The list price doesn't mean that's what the value of the property is. So I've seen many times where, listing agents will list it low in order to create a demand. I've seen lots of times where they've listed it high. That doesn't mean that's the value. That's kind of the suggested, and this is a negotiation. So just because this is listed doesn't mean you should come in less, but it also doesn't mean you should go in over. I think you need to do your due diligence and have that understanding.
So, some of the things I like to ask agents when we're talking through this is, especially if they're on their third or fourth offer, is where do you think where are we losing right now? What do you think?
What's the reason?
What do you think that is? Because sometimes we do have to have a come to Jesus meeting with the clients as the lender to get them more comfortable. I mean, I can't tell you how many times I've gone back and said to a buyer, a client of ours, like, hey, can we meet again? Like, you've been out looking for a few months. I think we need to have a refresher on some things that are going on in this market, right? So if it's price, we might need to get them more comfortable with going up. A lot of times people are buying in Chicago, at least, they're not maxing out their debt ratio. We're not like California or, the West Coast. Like, a lot of times we have people like kind of undervalued on where they should be, a little more conservative, so they can still save at a good pace. But that might be another conversation. Are you guys losing the price? Has that been consistent? Yeah. And if so, we might need to reevaluate that underwrite that we had and say, look, you guys can afford a little bit more. We talked about this, but I wanted to have a refresher on it.
Circling back, it's price and terms, right? So it's either the price, so do we need to go higher, or we need to get a little bit more competitive with our price and understand that the list price is just that's a starting point. Now we need to see the value. And then the other side, the question is the terms. So Are we losing because of the terms? Are we putting 3% or 5% on the contract, despite the fact that we've got the ability to put down 20%?
Yeah.
Like, it's a question, because if they don't know, going in at a 3% offer is not going to cut it in this market.
Not at all. Not at all. And again, that's like a tactic we've gone over in the past is, can we show more funds for closing, down payment, like whatever the case may be?
Even go as far as, a conversation this past week, we are tapped out liquidity wise, but there's a lot of money in that 401k. So we can go non-contingent with regards to selling our property, but in the short term, if we take a short-term loan from our 401k, we can make it up. We can put 20% down, and then when we sell the property, we can just pay back ourselves.
Bridge loan. Right?
All day. Internal bridge loan.
And in most cases, just so you know how this works, as long as we verify that they have enough to put that down, we're good.
Yeah.
Like, what they do outside of getting their offer accepted, if they said, hey, as long as my appraisal checks out, the sellers really don't care.
They just want to make sure it closes.
They just want to make sure you're financially strong and sound, right? That's it. So they want to make sure that you have the ability to put that much down in case the appraisal came in lower, or in case they were, the other three offers were 3%. We want to see that you're a stronger buyer. That's the gist of it, right?
Absolutely.
Another one that I think is great for, us to talk through together is contingencies. Like, that's been a big one. Like,
big debate. I mean, we've touched a little bit on it already, but the contingencies with respect to the mortgage contingency, which we said, and in terms of your personal situation, but other ones we haven't talked about. Obviously, the as is or inspection specifics or appraisals.
We're seeing a lot of as is with inspection. No request. And I think that's been a big one that's helped us. One, just basically says you're going to have an inspection done. You can still back out of the deal, but if you're not going to go back and beat them up, you're not going to go back and ask them for really much of anything.
No, you can't.
Right?
I mean,
so I want everybody listening today to understand that's what you are up against right now, right? So if you're not making those types of offers, you definitely need to. And then, the other side too is like the neighborhoods. Like,
yeah,
you're going to have a much better chance probably not having as many offers in certain neighborhoods than you would in like Lincoln Park, Lakeview. I mean, all of that stuff's super hot right now. And, you got to understand the neighborhood that you're buying in.
And the price point.
And if you don't understand it, that's a question you ask the realtor. How competitive are these neighborhoods right now? Do we need to talk strategy? Do we need to really go in deeper on like what we've already gone over and really hammer down to the client? Have you talked to them about that just yet? Because they're going to need to do that when you get into the certain neighborhoods.
Again, I think it's all, and I said this a couple times, circles back to just asking the questions and taking control and making sure you're not afraid to step on people's feelings. You're not afraid to ask the difficult questions to really, at the end of the day, get the desired result.
Yep.
Because the longer you kind of, tiptoe around the questions that need to be answered in order to get you a property in this market, the longer it's going to take you in order to actually get your goal.
Yeah. And there's one other piece to these deep questions. Just because they answer a question, like a lot of times I feel like we ask a lot of closed-ended questions.
Yeah.
But, ask them, are you comfortable waiving mortgage contingency? And if it comes up and they say no, because you just asked a closed-ended question, so you got a closed-ended answer, ask them why.
Yeah.
Why does that make you feel uncomfortable? And they might tell you. And then once they tell you, you got to ask them why again. A lot of these questions that we're talking about, guys, you have to ask why probably 2 to 3 times to really get to the root of the problem. Right?
And I think once you know the root of the problem, or at least the root of the answer, it helps you to, and I don't want to say solve it, but at least understand.
Yeah.
Okay, I get that. That's not an option.
Yeah.
Or, here is a solution to that issue.
Right.
What do you think?
And hey, I don't feel comfortable about my job. You asked a lot of why questions. I don't feel comfortable about my job. Then we're not going to do it.
No, absolutely.
We would never. The thing you got to understand is that if you're working with professionals, we're never going to put you into a spot where there's like you're in the line of fire, right? We want to put you into the best spot to win, but we're never going to put you into the spot if the communication's there and the right questions are being asked to where you're in the line of fire and you stand a chance on losing a lot of money during the transaction. That's not what it's all about.
No.
Right? And we talked about some things that lenders and realtors can ask each other. And now I want to touch on some things that we hear a lot of, like questions that buyers, I don't know if I should say should ask, but do ask a lot. And so one question, and Tom, I'm going to let you respond to this, like one question that we get all the time, I probably get it 5 times a week. Should I wait for interest rates to drop?
Yeah, I get that question. Sometimes it's a statement, I'm waiting for interest rates to drop.
Yeah.
And the reality is that's kind of a fallacy, and everyone saw it. They posted it, date the rate, marry the mortgage, marry the home. We saw that posted everywhere, but that is the reality. And we have both had clients that, purchased within the last 2 years, and they took out 7.5% interest rates. And guess what? Rates have gotten down into the mid 6s. And so now they've refinanced. And one of the things that we saw, they now have 20% equity, whereas before they had 5 or 10%. And it's because what doesn't stop is the appreciation and the value. And the market is supply demand. As the demand continues to increase or stays steady, the prices increase. And so that is not anything that we can stop or fix. But once you purchase the property, that is where you are.
Yeah.
The value is what it is.
It's funny because if I showed you a comparison of a $500,000 loan at 7.5%, and then prices jumped up, let's say 20, let's just say 10%, and a 550 loan at 6.25, the payments are almost the same, but you just paid more for that house and had to put more down, right? So that's where I think the conception is about waiting for rates to drop. That's one misconception, and the other is just the amount of competition that we're seeing entering the force right now. Like the amount of pre-approvals that I'm seeing. Where I had a client call me today from 4 years ago. He's like, "We're ready." I'm like, "Oh my gosh, it's good to." We keep in touch, but like, what do you mean you're ready? I talked to you maybe like 6 months ago and you weren't ready. Well, we're ready now. We got another kid, so.
The big thing that I think people are also disappointed with, and that lends to this, excuse the pun, is salaries, income aren't keeping up with the appreciation rate. So you talked about, going up to 550 at 6.25, about the same payment. The problem is that a lot of our clients are still only approved up to that 500. So now what you get at 500 is not the same thing you got 2 years ago, and you're disappointed, or you can't. That doesn't work for you.
You price yourself out.
Yeah,
you can't even really buy anymore. I've still got clients right now that I keep in touch with that haven't bought since 2020. We did a loan a year and a half ago for a guy, he was wanting to buy a multifamily. He was like, I know I missed the last 3 years. I'm paying a lot more, and my rate was down in like the threes when I was looking at this one originally with you.
That doubled.
It almost made him like throw up. Like when he was like finally under contract, he finally owns, which was smart because he's taken advantage of the last 2 years, but he missed that window. So it's not timing the market, it's time in the market. You got to just pull the plug. We can always refinance you. So that's a very common question. Another one that it's a fear that I get when I'm meeting with clients, but how competitive it really is it right now? And
it's competitive.
It's competitive. And so, we just last weekend on a condo, we're in a multiple offer, 15 offers. That's pretty competitive, and I don't even think we were right before March. It was the end of February.
Yeah.
So anything that's, there's two types of product out there. There's that's sitting there for a while in the wrong neighborhoods, and then there's that's like in the right neighborhoods that people want and they're going to go after. So you're going to see, as we continue to get down into March, April, and with the amount of inventory that's just not out there, like you're going to see that those offers pick up. So the competition is great, but as a buyer, that's a great question to ask. Like, how competitive is it right now? Like, give me some examples, because you want to get them, again, into that emotional brain and logic brain to where they're listening to you. Because I can tell you, I track this stuff, but our multiple offers last year, we were 60% conversions, which is pretty darn good in this market.
Very good.
Right? So it's a great question to ask. That's another great question to ask. What's your conversion in this market? Like, if you're tracking your business, but what's your conversion? What's your success ratio on converting these multiple offers? And then we talk about tactics and we talk about how to get it done. So
I think the bottom line is, again, having it's not just a one and done meeting and then just going out there and find a property anymore. It's something where everyone needs to work together, talk through all the possibilities, what the risks are, what the rewards are, and really what's the end goal and what are you comfortable doing. And I think everybody has that limit and everybody has that understanding. And are you a fall buyer or are you a spring buyer? And that's really what it's going to come down to, because they're two completely different markets.
And it's okay either way. Right. It's just
understanding.
It's what your appetite for the risk is. I know some people just are going to flat out not want to do it. But in order to get to that spot, to find out what type of buyer you are, like, I think to sum all this up, that those consultations are so big. The ones that I don't do consultations with, they either have landmines that they step on during the process, or they don't make the right offers. The ones that they're working with, the agents I see out there that are making, I don't know, like fluffy offers, I guess I would say, they're not really spending time with their clients.
Well, so when you say
the dog wagging the tail, is a tail wagging the dog or whatever, right?
Yeah. When you say consultations, it's not just the lending consultation. It's the whole team consultation.
Yes.
It's the buyer and the agent. It's the lender and the buyer, and it's the buyer, the lender, and the agent all together.
And look, realtors, if you're not getting the vibe, like, I know it's hard sometimes, but have them get a second opinion. Have them talk to your lender that you trust, that you want a lot of deals with. If that vibe feels off, you've got to get them.
Take control.
You got to take control. You got to be the quarterback. You got to get the right players in there to make sure you're going to win at a high level in this market. It just is what it is.
This is your business. If you're going into something not thinking that you have a good shot at winning as a result of something, you got to fix that.
Yeah.
You know, whatever that may be. If it's not an understanding from a buyer perspective, if it's not a lender on your side, if you're not the right agent and you're not willing to do it, you're going to struggle in this market.
If anyone struggles with the deep questions, things like that to ask, reach out.
Yeah.
Drop us a DM. I've got some of the best deep questions.
Well, and I would challenge you, if there are other deep questions or other things that we haven't brought up today, DM us as well.
Yeah,
I'd love to hear
more. The more the merrier for me. And the other thing too is if you're a realtor or a lender and you're struggling with a professional presentation, like how do you put that together? What do I say? I don't know what to say. DM us. We'll help you out. We'll throw some information your way and help you guys really get a grasp on how to like sit down, have the right talks, get your buyers into a spot to win more than they lose.
I love it. Good stuff.
Great topic today. Like I said, guys, follow us. We're on Instagram. We're on YouTube, all the social media channels. We'd love to hear any comments you guys have about the show. And again, I'm just ready to go to battle.
Make it happen.
I'm Mike Black.
I'm Tom Merritt.
And we are
More Than a Mortgage.